Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
You know what we should talk about more, Eric? Nvidia. Has a stock ever done anything like this?
No, I can't recall. I mean, Tesla, Apple's was a little more of a slow build.
Yeah.
And it's been on the top of the mountain for so long.
That's what distinguishes Nvidia. It's like, it feels like it almost came out of nowhere and just is larger than anything else.
Yeah. It's sort of, even though it's happened over a couple years, that is a short amount of time to grow as fast as this stock has. And so on our team, as ETF analysts, we're sort of like scientists in a way. And this stock provides such an interesting way to analyze how indexes are reacting, how product is being changed. There's so many little subplots because of the rise of Nvidia. And I was looking at our notes and I'm like, wow, about half of our notes have been on Nvidia. And I think the only other time we talked about this recently was with Will Rind of the double leverage Nvidia ETF, which we have covered. That's one of like 6-7 angles that we've taken on Nvidia. So I thought we should cover the rest.
Yeah. You think you're really a scientist? I'm gonna
a little bit.
That.
Yeah. I mean, okay. Like there are.
I think actual scientists may take an issue with.
You remember the scene in Silence of the Lambs when Jodie Foster brings this sort of specimen bug to those two guys with the thick glasses?
Sure.
And they're like, "Oh, look at this!" And they get all excited. That's us with stuff like this. I swear to God.
Well, we'll test that theory. On this episode, we're going to speak with Athanasios Psarofagis, an ETF analyst with Bloomberg Intelligence, as well as Emily Graffeo, a cross-asset reporter with Bloomberg News, her first time on the podcast. This time on Trillions, the Nvidia Effect. Emily, Athanasios, welcome to Trillions.
Yeah, nice to be back.
Thank you for having me.
Okay, Emily, let's start with XLK. What is XLK? How does Nvidia factor into it?
So XLK is a technology sector ETF that investors use to gauge, okay, I want to invest in tech stocks. They can buy the Qs, but they can also buy XLK. And due to the way that the index that XLK tracks was constructed, it didn't really have a large weight to Nvidia in the beginning of the year. It had big weight to Microsoft and Apple, and then Nvidia's weight was like only 6%. So it was actually underperforming the S&P 500, the Qs, and it really wasn't a good gauge for, okay, how are tech stocks doing? Because it only had this 6% weight. So then it had to rebalance, which we've seen recently, and the weights basically switched around. So now Nvidia has a much higher weight in the fund.
What's weird about this index is you look, if you were to pull it up before the rebalance, you'd see Apple and Microsoft like 22% weighting each. So like half the fund is these two stocks. That's weird, first of all. Then there's this huge drop off, almost like a cliff in the ocean. And then Nvidia was 6%. And so now the question was, will Nvidia get big enough and pass Apple by the rebalance date to be the second spot? It's the difference between $11 billion of buying, basically. Like if Nvidia passed Apple by this Friday deadline, it got $11 billion in buying from the ETF because it would go from 6% to 22%, just like that. And Apple would have $11 billion of selling because it would just fall off the cliff. And it beat it in the last hour of trading. It was like a photo finish in a horse race. So Nvidia is now 22%, Apple down to, I think, 5%. And the rule, I just talked to James, who's covered this, the index has a rule that any stock over 5% weighting, the 5 of them can't make up over 50%. So what happens is the two biggest stocks are so big, Apple and Microsoft at the time, they took up all the budget of the 5 stocks. So everybody else got like crumbs. So it's a really quirky, I think they should design it differently. They should have it cascade more. And so this to me is a fascinating index situation that Nvidia shined a light on. And now it's so funny that Apple, the great Apple, got kicked down to the sort of like the bottom rung, the crumb level.
But when's the next rebalance? Athanasios.
This would be in the next quarter or so on the calendar quarter. But I mean, ETFs, indexes rebalance all the time. I can't remember such a big deal, right? There's been a few over the years, but this one was a really big one. And I remember when someone had brought it up, it was even our group chat. Someone said, oh, Nvidia's only a 5% weight. And you guys had mentioned how it came out of nowhere. I'm like, oh, that sounds normal. Like Nvidia's still like really small. I'm like, no, it was like almost the same size as Apple. So anyone who thinks that like ETFs are passive should read through this document. It is insane. Like you need like a PhD to figure out like what is happening. But yeah, this was a big deal. And so we'll see. This might all be in vain because if Nvidia doesn't hold this weight in the next quarter, it's going to reverse this entire trade. It'll just go back to the way it was beginning of the year.
Which speaks to what we want to talk about, which is the effect Nvidia is having within ETFs. So what else has your research borne out?
So we actually covered something the opposite. So as you can imagine, some of the best performing ETFs all had a pretty lofty weight to Nvidia. But we actually wanted to look at the ones that weren't depending on Nvidia, like who's done well without it.
Oh, there's been products that have done that?
Yeah, there's not many, but there was some interesting findings. So we looked at any ETF that's beat the S&P since this Nvidia run with a very low to no weight with Nvidia.
This is like winning the Tour de France in the 90s without doping.
Did that happen? I don't think it actually happened, though.
I thought that's what I'm saying.
Yeah. So
that's how crazy this is.
It was really impressive. I'm sure your listeners might be happy about this one, but crypto was at the top. Has very little. I'm sure at one point maybe these worlds like converge, but they don't. A lot of the crypto funds don't have Nvidia exposure. The other one was, and this is a very like kind of like pro-America story, but a lot of reshoring. Anything sort of American industrial revolution, bringing manufacturing back had done really well. And then it was just a splattering of random countries. Japan, Greece, actually, India had all done really, really well without Nvidia.
Was it home builders on there too?
Yeah, and home builders.
That's interesting. Home builders beat
Nvidia.
Beat the market.
Okay.
Without Nvidia.
Without Nvidia.
Yes.
But it wasn't a lot of ETFs, right?
No.
Just 96 out of a universe of more than 2,000
Yeah,
ETFs.
it's hard. It's impressive, like to Eric's point, like so not many. But the reason this came up is there was that little correction about a month ago with Nvidia, and it was sort of dragging the market down. So, it's a double-edged sword. A lot of dependency on Nvidia, and it could go the other way if it does.
And this is something David Cohn, who covers mutual funds and active managers for us, found also, is that large cap growth managers, if you outperformed, you probably had an overweight to Nvidia. If you underperformed, it was less. So it's funny that it's come down to Nvidia plus maybe the Mag 7. Do you overweight or underweight? That is the question. And who knows? Every time you've underweight because, hey, could they really go up more? You've lost. But at some point, you're going to overweight and lose. But when will that be?
So another thing that you seem to have honed in on, and you mentioned it here, is how Nvidia and passive interact, because there's this, ongoing debate about active and passive, but like who's actually buying Nvidia and ETFs that hold Nvidia?
We've also been working on broader pieces about like the effect that passive is having on the markets, right? And I thought Nvidia was a really great example. Like it just didn't decide that one day path was like, oh, let's make Nvidia like the top stock in the world, and all of a sudden it moved up the rankings. Like that's still hedge funds and retail and institutional buyers decided they liked the stock, they bought it, and it moved up. But you have to remember 8 or so years ago, Nvidia was like 300 or so in the S&P, like its ranking, and it just moved up, right? And while Apple and Microsoft all stayed at the top. So it wasn't, this is still very much active setting the prices on these stocks. So I thought this was a really perfect example that passive is not the one deciding to move these stocks higher or artificially keeping these stocks higher. So I thought this was like a really, really prime example of how interest in the stock in active buying is what's going to move it up, not just passive flows.
Let me break that down a little more. So you have an index. Active managers love NVIDIA. Retail investors love NVIDIA. They start buying it. The price goes up. The market cap goes up. The index, which has rules, is like, okay, this thing is now a couple $1 trillion. It should be second or third in the index. And it's just simply a market cap decision that is made by active. On the flip, what was it, General Motors or GE?
GE.
GE, they hate. So they started selling it, and that went out of the top 10, top 20. I think it's now to 150 or something. So, active it's ironic. Active controls the index weightings. It's ironic, but it's true. And what I thought was interesting about yours was that those top stocks have been in the top 10 for like 7 years. Only NVIDIA has like broken through that, like, I guess you'd call them like the studs. And it's hard to break through, let alone go to number 2. It's easy to go from 370 to like 150, but to get to 2 from 370 is crazy.
Yeah, if we see kind of it's literally like a parabolic chart. There's no stock, I think, that's ever sort of had a run from where it's been to where it is now.
Emily, how is this borne out in your reporting? Where are some ways that you're seeing the effects show up?
Well, you can't really write a story about markets in 2024 without mentioning Nvidia. So every time we're writing about an ETF that's underperforming, the reason this year has typically been that it doesn't have Nvidia, and one that's outperforming the S&P 500 probably has an outsized weight to some AI name, typically Nvidia. So that's kind of been what I've noticed as a reporter. You literally can't not mention it and not think about it. And it has been interesting too when we talk about the passive versus active, because I write a lot about retail investors who just buy these low-cost index funds, and you can pretty much get a really large weight to Nvidia, the most important stock of the year, if you just buy SPY or VU. I think a lot about portfolio construction. Why would you buy an AI ETF that has a big weight to Nvidia if you're already buying the S&P 500? You already have that big Nvidia weight.
Yeah, and it's interesting. I agree with you. I think the AI story is a little bigger, but personally, that's what's great about index investing. You don't have to worry about whether you own something. You do. So it's you can just be walk around, but you don't own a lot of it. Now, one example I thought that is interesting is robotics and AI ETFs. Mm-hmm. So robotics ETFs been around for 15 years, and they had this huge run up. Then they fell. People left. Then they actually came back, got some more money, but then they fell again. And I was like, okay, I think these are just going to die off. But then Nvidia kind of gave them a third bite at the apple. And so I think I know from my personal experience, people I know have asked me about AI investing. And, if you look at chat, there are stocks outside of Nvidia, but Nvidia clearly is the big winner here right now. And so the good news is most people already own it. But people are a little greedy. They want more. They want more, to get deeper into AI and not miss anything. And kick themselves later. So I think that's why robotics ETFs got that rare third bite at the apple, which we also wrote about.
Athanasios, another thing that you wrote about that I think was an interesting insight that I hadn't considered before is the actual price of the ETF that holds Nvidia compared to maybe the stock itself, right? So what does that look like?
Yeah, we don't think about this that often, but it got up to 1,000 plus.
Nvidia did.
Yeah, Nvidia got up to 1,000 or so a share. And this just comes from text messages with my friends sometimes. They're like, oh, I don't want to buy Nvidia. It's $1,000 a share. It's expensive. So I think sometimes retail has this association that if it's a low price handle, it's cheap, right? And then now you have all these single stock ETFs. And something you don't think about is they trade at a lower handle. They're $25 to $30 a share. Yes, they might be leveraged or whatnot, but I think before the Nvidia split, a lot of people were using single stock ETFs just as fractional trading in a way. While you could do it on the platforms, they didn't really take off as much as just kind of buying a single stock ETF, or even why people buy bond ETFs, right? You don't have to buy a full bond. You just buy a fractional share of a bond. So I think that's an unintended advantage of the ETF that doesn't get covered enough.
Because instead of paying even a fractional share of, say, Nvidia, there's this psychological effect that it's oh, that feels expensive versus I can buy something that's in an ETF wrapper in a fraction of the price.
Totally. Would you rather have one share of the Qs or 10 shares of QQQM? I think psychologically that impacts people. So I have 10 shares versus just one. I don't think it's the main reason why they would buy a 2x levered Nvidia, but I think it's something that is advantageous.
I don't know. You guys call yourselves scientists and you're talking about text messages with your friend. Is there any real research or analysis here?
Yeah, I mean, a lot of there's been gold. GLD had a huge handle. I think it was $600 or something. Don't ding me if I'm wrong, but it was high. And then the mini me gold came out and purposely made its handle $40. So a lot of times when they do introduce a new fund, first of all the handles are typically low. But sometimes if somebody creates a mini me of a large fund, they do lower the handle. Now, a large price handle can actually help institutions who sometimes pay per share. So they actually like to have the big handles. That's why there are these old stalwart kind of ETFs that keep the high handles, and then the mini-me's with the lower handles, so they can serve both worlds. But I'm with you. Retail definitely likes that. This probably is benefiting the Bitcoin ETFs to a degree. You can buy many shares of IBIT, but to buy one Bitcoin would be, $54,000, which is a lot. So I think people do like to have that satisfaction of owning more than one share.
By the way, we've said it 30 times already. How do you actually say Nvidia? That's how I say it, Nvidia.
I think I've said it wrong already. Katie Greifeld and Scarlett correct me all the time. It's Nvidia.
Yeah, Nvidia.
But I tend to say Nvidia. Like Nvidia, like too quick or something. I don't know.
That sounded right.
Yeah.
I don't know. I've been corrected.
Do it again.
Oh, the Eric
normal-
way or the real way?
The Eric way.
Nvidia.
Okay.
They would say Nvidia.
Okay.
It's almost like you're pronouncing this capital N. Then you're going Vidia. Nvidia.
Yeah.
But
Okay.
I
I
don't
think
know.
I say it right.
Yeah.
Now I'm self-conscious. Thanks for that. I
You're
like
welcome.
That. Okay, Eric, we talked about how Nvidia felt like it almost showed up out of nowhere, even though it was actually kicking around. But then it had this kind of super surge and has become such a integral part of the market. What long-term implications does this have? Because one thing about this company, it seems like it has a pretty deep moat. There's not a whole lot of people who can do what Nvidia does. So what implications does that have for the market, indexes, and ETFs as a whole?
It's a good question. It's something we're watching. I think the advent of single stock ETFs is really one thing because you take a stock that trades a lot and is huge and you just add different ways to bet on it. Let's go short, let's go double long, let's add call options, and you're going to sell that. So I think anytime a stock gets hot or big, you're going to see an ecosystem build around it. The ETF industry is going to give you 100 ways to play it, to bet on it, and that'll be one thing. Now, I don't know if Nvidia is that unique. I mean, Apple went up and down, Tesla went up and down. I think the Mag 7, though, and these big mega caps are so big. I think, like, if you take a couple of them, they're bigger than the entire stock market combined or something. Gina had some stat. I think the top 5 stocks in the S&P are bigger than the bottom 250. It's something ridiculous. I think that the indexes, I don't know, like XLK, if I were it, I would make a change. I would not do 22, 22, and then 5. I would cascade that. So these mega caps, I think, does pose some questions for index makers. That said, as much as these index gets kind of like mocked on Twitter sometimes for like being like dumb and not having these rules, they still beat active because you can get them for free. The cost factor well overwhelms some of these dumb quirks that you see.
Yeah, those are all great points. I think there's a lot of ways to play NVIDIA and AI companies. I think the next frontier is going to be using AI to pick stocks, right, or make asset allocation decisions. There's a couple products out there, AIEQ, which is like one driven by AI. But what's interesting about that, it doesn't own NVIDIA. Like, how does AI not know to own this stock?
Yeah, why
right?
isn't that like bet on me?
Yeah, so shouldn't have figured that out. But anyways, I think maybe the next frontier might be AI-powered ETFs.
Why doesn't it own?
Yeah, I don't know. I got to ask the
expensive.
algorithm. Yeah, maybe
Well,
it
but
just doesn't think it's a good
They did come out with the
investment.
one IBM Watson picking stocks.
Yeah, that one.
Which is AI-ish, I guess. And it didn't do that well.
Yeah.
It traded too much. The turnover was intense, and I think it returned half the S&P. I think you're right. AI will be used to pick stocks, but it's going to run into the same problems humans have, which is when do you buy and sell? How much are your costs? I don't know if it'll be able to AI out of that.
I think of that meme with DJ Khaled when he says, "Congratulations, you played yourself." And that's kind of like when an AI-powered ETF is underperforming actual AI stocks.
Yeah.
That's good. That's pretty good. Yeah. It's because not to pick on the IBM Watson one, but they were like, when they came out hard with the marketing. They're like, we can analyze this, 8 million pages of research that 8,000 analysts can do in 8 seconds. Like, it was something so crazy. And then, but my theory is the machine learning, the computer is going to end up going, wait a sec, it's going to end up into getting into Bogle land. It's going to go, wait, what if we trade less and lower our fees? That's how we win. And it's going to end up, the AI-powered ETF, if it has machine learning, will end up being VOO.
All right. On that note, Emily, Athanasios, thanks for joining us on Trillions.
Okay, thanks for having me.
Thank you.
Thanks for listening to Trillions. Until next time, you can find us on the Bloomberg Terminal, Bloomberg.com, Apple Podcasts, Spotify, or wherever else you like to listen. We'd love to hear from you. We're on Twitter. I'm at Joel Weber Show. He's at Eric Balchunas. This episode of Trillions was produced by Magnus Hendrickson. Bye.